Welcome to my YouTube channel where I'll be sharing valuable information regarding Forex trading. My name is Uyanda and I was introduced to the trading industry at around February last year. I then started trading in March and finding it to understand very challenging, I then decided to seek assistance from a few Forex traders I knew myself. Didn't go well. It never goes well. Thing is, majority of the people out there who consider themselves successful traders aren't really successful as you might think. And as you progress in your trading journey, you'll come to very difficult experiences which are there to push you to your absolute limits and help you into not only becoming a better trader, but into knowing how to manage your finances well. All of this I'm saying out of experience of more than a year of trading, and I hope that'll be just enough for me to be able to help you to grow towards becoming a better trader. Okay, so I wanted to start off by analyzing EURNZD on the daily time frame. So the first thing to have a look at is in which direction are we going at the moment. So as you can see from the price action right here, starting at this point, you can clearly see that the market is in a bearish trend or in a downtrend. So automatically that should tell you that you should be looking for sells and you shouldn't be looking to go long. So now we have that out. The next thing to look for is in which phase are we in at the moment. So we're coming from a bearish impulse move to the downside. We had a bearish impulse move there, we had a correction, and we had another impulse move to the downside there. And at the moment we're in a correction, or we're in a bearish flag, which means we should be looking to go to the downside. And now, with that out of the way, I want us to have a look at our support and resistance zones. There we have our that's our current resistance zone, and this area right here can be our support zone. So as you can see, when price came here, it bounced off and went up and then came back down, and we had quite a busy day there. We broke below, we had a retest, and boom, we shot back down. We rejected there. We had a few rejections there. We went up, we broke below, and then went back up, and we had quite a busy time there, and finally we broke to the upside, and then we came back down. We went back up and came back down, and then we went back up again. We went back down again, and we went back up again, and this time we broke through our resistance zone. That's turning into support now. And then what happened here, if you look closely, we broke out, and then we had a correction. As you can see with those two candlesticks, we had a correction or a bullish flag, and then we broke out fully. But now we've came back down and we're underneath resistance again, which means we should be looking to go to the downside. Number one, we're in a bearish trend. Number two, we're beneath a resistance zone, and number three, we're in a bearish flag. So those are actually three green flags, which indicates to us that we should be looking to sell the market. So let me just clear out my analysis. Let's do this. So right now I want us to go down to the 4-hour time frame and filter out our entries. Let me start by making my analysis look nicer. Okay, so right now we can see that we actually had corrective structure to the upside, and then finally we broke out of it. And if you look closely, we had another correction or a bearish flag, which means, so we're coming from an impulse move to the downside. We had a bearish flag, we had a bearish flag, and now we've broken that bearish flag, which means we can actually take a trade now with our stop loss right above there, and I'll take profit right down there. But this is not a good enough risk to reward ratio, which means we should actually be looking for a better entry. So that's what we're here to do. We're here to look for an entry. So let's do that. So if you look closely at this price action right here, you can clearly see that we have quite an important zone right there, which means, okay, so now this zone can actually act as our entry point. So now we can be looking for price to go back to the upside in the form of a correction or in the form of a bearish flag. And then once it touches our zone right here, which is now resistance, we can immediately take the trade with the 50 pip stop loss, round about a 50 pip stop loss, and I'll take profits targets. I'll first take profit targets all the way down there. No, actually I lie. These can be your first take profit targets. This low right here can be your first take profit targets, and that can be your second, and these can be your third take profit targets. Or another way to take this trade would be to, let me just delete this. You can actually, if price doesn't go up, so if price doesn't go up there, you can actually plot a zone right there, a support zone right there, and patiently wait for price to break below this zone and give you a correction or a retest, and then you can take the trade to the downside. It's still a good risk to reward ratio with 50 pip stop loss. It's still a good risk to reward ratio, but just not as much as the first one, but it's still a trade that I would take. So that's it for EURNZD for the week. This is what I see. We'll see how it plays out. The next pair to look at is USDJPY, and I don't want to focus on this structure right here, but I do want us to focus more here. So the first thing to look at is the trend. In which trend are we currently at, or where is price currently going? From this price action right here, we can clearly see that the market is looking to go up. It's in a bullish trend, as you can see. It's in a bullish trend, so you can actually, or you should actually be looking to go long or to take buy trades. But then it's not, with price action looking like this, it's not a very smart thing to be looking for buys, because it can actually go down, considering the fact that we're in a corrective structure. So let's plot our support and resistance zones. Let me see. So we have a support zone right there, and we have so we have a resistance zone right here. There you have a touch, you have another touch there, but now it's currently support because it broke to the upside. Right here we had a touch, we had another touch there, we had another touch there, and another touch there. You can see how sensitive these touches are. Okay, so this is currently a support zone, and that is currently a support zone. But right now there are actually two ways you can be looking at USDJPY as of the moment. So you can actually be looking to go long because this zone is currently a support structure, or you can be looking for the market to break to the downside, give you a clear correction or a flag, and then take the market down, your targets being the supportive structure right there. So let's go down to the 4-hour time frame and see how I would take the trade. So just like on EURNZD, I'll actually be waiting for the market to break down and give us a clear correction. That's what I'm looking for. I'm looking for a clear correction. If I do not get a clear correction, I'm not going to take the trade. And then after the clear correction, I enter with a 50 pip stop loss, and my first target's being somewhere around there. It's a good risk to reward ratio. It's a 1:3. Perfect. Or if I do not get the clear correction, what I can be looking for is a clear break to the downside, and then a push back to the upside, or in the form of a retest, and preferably give us a rejection on the daily time frame or on the daily candlestick, and then I can take the entry with a 50 pip stop and my first targets being there. So that's the probability of USDJPY. It's likely gonna break our supportive structure and go to the downside. If you're looking for bars, you can be looking for patterns such as double bottoms, and then you can take the trade from there with the small stop loss and your first targets being the previous high. Or you can actually be looking for the markets to break to the downside, give you a clear rejection on the daily time frame, and then you can take the trade from there, your stops being there and your first take profit targets being there. But this is not actually a good risk to reward ratio, hence why I'm saying a sell off to the downside would be better. So there you have for USDJPY. It's going to be a very difficult trade, I must say, but if it doesn't give you what you're looking for, then you don't take the trade. It's as simple as that. You only trade your plan. If you don't trade your plan, and things take an unexpected turn for the worst, it's not a great feeling to experience in such an industry, you know. So plan your trade and trade your plan. That's my advice for you.